Hello and welcome back to Stock Market Weekly, your favorite 20-minute show catching up on all of the notable moves across financial markets. I'm your host, Evan Medeiros, and we publish these shows every Friday, so make sure you are subscribed to the channel. Tune back in on the weekends to make sure you're prepared for the week ahead. Let's get right into it. It was the first full trading week under the new administration. I think there are over 200 executive orders signed in President Trump's first week, and the markets held in there. I mean, the Treasury market mostly behaved. There wasn't a big move either direction for yields, which was constructive to see. Equity markets challenged their prior all-time highs, briefly getting above them, depending on what market you're looking at. And earnings season is underway. Earnings have been generally pretty good so far. The financials were kind of the standout here, but next week we've got the heavyweights. We've got the Mag 7, we've got Apple, Tesla, Microsoft, Amazon, ExxonMobil, Starbucks, right? There's a lot. It's the heavyweight lineup for next week of earnings. So that's going to be certainly front and center in terms of guidance and how the market is, how companies are feeling about this economy and the current levels of interest rates. We also had gold challenging its prior all-time highs. And notably on Friday, the US dollar cracked. I mean, we saw a notable kind of shift here where we saw the dollar index sell off, perhaps related to President Trump's kind of evolving rhetoric, maybe around China instead of tariffs. Maybe there's some deals that can be worked out, and the market or the dollar index certainly liking that. So plenty to chew on. Before we get into the episode, don't forget this video is sponsored by our friends Investors Business Daily. We've got links below to their cool products. We've got Market Surge, we've got their IBD Digital, both of which I use pretty much every single day. So make sure you do check out those links in the description of this video, get yourself some discounts and help support the show. And with that, let's get into this week's episode. All right, here we go. We've got some charts in front of us. TC2000, it's another great charting platform. We love IBD, we love Market Surge. We also love TC2000, and we do support this platform here at The Trade Risk. Most of the cool scans, layouts, indicators, things you're seeing throughout this video can be built or is available on our website. So check out thetraderist.com. Check out the description of this video for links to both Market Surge and TC2000 if you're interested in a new trading platform. Let's get into the numbers here. You can see right-hand column, it was positive across the board. You know, I was pretty hesitant last week. I was a little bit, kind of walking very slowly, kind of easy on whether or not this market could really continue the pace here, and it certainly did. The Dow Jones was the big leader here this week by not a huge margin, but 2% is notable. Remember, it was the first to kind of sell off and get hit pretty hard, and now it is springing back to life a little bit better. Take a look at volatility also coming out of the market. The VIX is below 15, so some of that fear and what Trump might release in terms of the first week of office is now kind of dissipated and out of the market. And I gotta say, it's pretty complacent given the fact that we're going into a very, very busy period of earnings. You can also see if our smart trend filters down here, I know that it's pretty busy charts, but all of the indices now, major US averages, are in a daily uptrend. This technically happened in most of them last Friday, end of last week, but you can see continued progress there on the daily time frame. If we take a look at sectors here, again, it was a pretty unanimous victory across the board here. Communication services, top of the list, up 3%. So was healthcare, and industrials up 2.5%, not too shabby. Really, it was energy on the negative list. And if you think about energy, the way it started the year, it was really kicking butt to the upside. So it's kind of digesting a little bit. And in fact, if you look at the 1 month returns for sectors, you can see energy is in fact the best sector over the past 1 month. So a well-deserved rest, and for you active traders, for you tactical traders, probably want to start scoping out the energy space as it continues to consolidate. Speaking of those smart trend filters, this is an indicator available on our website, and for TradingView users, it's available as well. But you can see here, looking at our smart trend filter indicator, we now have daily uptrends triggered across every sector except for staples in the bottom right here. You can see staples still kind of finding their footing, if we're going to try and be generous in the terminology. Really, it's been a very painful spot to be over the past few months, and that continues to, try and stabilize at this time. Everything else, though, is kind of hooking up and springing back to life. Now, if we take a look here at let's see, if we take a look at our macro slide, you can see that the dollar index was pretty important this week, and particularly on Friday. Like we talked about at the top of the show, we saw really a kind of a second cracking here of the dollar index. It started to roll over kind of a little bit earlier in the week, late last week, but really on Friday we saw that kind of knee-jerk reaction lower. And again, perhaps relating to President Trump's comments, that was encouraging to see. The dollar index and the 10-year Treasury yield, they're sort of one and the same, kind of locked in the, tied to the hips, however the expression goes. And, the dollar index kind of cracking, yields continuing to stay in check. I continue to think that the 10-year Treasury yield is sort of the secret front and center indicator that we all need to be paying attention to right now. I think it's just, really the big elephant in the room right now, and whether or not the Fed can control inflation and what those expectations look like. As long as the 10-year Treasury yield remains fairly in check here, even if it's going up very slowly, I think that's fine, but some acceleration to new cycle highs, some acceleration higher in the 10-year Treasury yield to 5% or higher is going to cause problems, I believe, in the financial markets. It's going to put a lot of stress on things. So for now, both of those are acting pretty well. Yields were up a bit, but generally not too alarming. Gold had a great week. We're going to look at that chart in just a little bit. Silver and Bitcoin as well. Copper was down, and oil taking a breather. So let's take a look at some price action here. We've got the S&P 500, which challenged, or in fact made, new all-time highs this week. Congratulations to the bulls here. Again, I came in pretty hesitant. If you recall my comments, I was kind of looking at things glass half empty. I know why I was fumbling around. Now I'm totally interrupting the cadence here. We missed the breaths. That's what I was looking for, and that's why I was clicking earlier. Okay, so let's go back to market breadth. Let's rewind a little bit here. If I wanted to invest the time, I'd edit this a little more smoothly, but we're going to just do it in real time here. Market breadth, that's one of the slides we look at every single week. And you can see that when we take a look at the number of stocks hitting 52-week highs, 52-week lows, you can see that we are, trying to improve here. We're trying to make and turn the corner, just like you saw in the sector trend slide, with a lot of these kind of hooks back up and these green dots starting to get printed across the various sectors at various times. You're also trying to see that occur in market breadth as well. You're trying to see the number of stocks hitting 52-week highs continue higher, and it's happening. It's slowly. It's not going to happen all at once. It's not as exciting as I would prefer to see. We're not seeing those big readings like we saw back in 2024, above 500-600 stocks making new highs, on a day-by-day basis. But hopefully we can get there. So let's continue to monitor this. It's improving, but it's improving slowly. So again, these are some of the signs that we wanted to see to get a little more excited about this market. And the other sign was, frankly, just getting back up towards highs, getting back above 602 in the S&P 500. Price action, tends to heal all things, right? So if markets can continue to hold above or break above resistance levels and then hold above resistance levels, that tends to be a positive developing story there, and breadth can usually kind of catch up and hopefully follow suit. So for the S&P 500, let's take a look at the weekly chart. You can see we're up about 1.74%. It was a new weekly closing high. Let's go to the cash market here. All right, so the cash market going out at 61, just over 6,100. You can see on a weekly basis, this is a new weekly closing high here for the S&P. Small tail on the top end here on Friday. We did kind of pull back and close down about 30 basis points on Friday. So a little bit of momentum kind of coming out of the market into weekend. But frankly, it's covered basically 6% worth of ground in 10 trading days, or just under 2 weeks of trading. So that's pretty impressive. It deserves a little bit of a rest here. Let's see if, next week, how we can, stay above or interact with these prior highs here. So again, we're kind of digesting right at the prior highs. I'm not going to be overly, anxious around exact levels here. I think generally speaking, if the S&P 500 can consolidate over, let's call it 6,040, that's a win, right? That's a good thing in my eyes. If this can, even if it pulls down, it fills this gap and it kind of checks back a little bit and it chops around over 6,040, 6,045, I think that would be a great win. That'd be good developing price action here and would start to give me more confidence that the bulls are in fact ready to continue this trend up. Now, if next week, and again, busy earnings week, if we get a violent rejection here, if we see expansion in range, pickup in volume, and just a sharp rejection of these highs and a thrust back down into this old range, then it's going to be business as usual. It's going to be that chop scenario. It's going to be more time needed. And that's kind of what, we're going to be on the lookout for. Right now, breadth is improving, but let's see how, we handle this busy earnings season. Let's keep an eye on that 10-year Treasury yield. But so far, so good for the bulls. Definitely an upside surprise in terms of performance this week in my eyes. Now, if we move over to the Nasdaq 100 here, you can see we did break the series of lower highs that we talked about last weekend. So you can see that we did break above it. We've got this not an earnings gap. We just have a general gap here that didn't quite get filled. Again, Friday's session was a little bit weaker. It tried to poke its head up to new relative highs and we reversed and then kind of closed lower. We didn't fully fill this gap in here. Volume was pretty light. So again, let's give it to the benefit of the doubt to the buyers here. We're making progress. We're continuing up. Again, next week, busy earnings. Let's see if we can, kind of hold on to the majority of this rally. Let's see if we can stay above, call it 520 in the Qs. I think that would be very healthy and constructive. I think there will be obviously some more movement here with some of the big names reporting, but I think that's what we're going to want to keep our eye on. Notice we did not quite get back to the prior highs like the S&P 500 did, so maybe a subtle kind of negative divergence there, but I'm really not going to nitpick that too much. I think the Qs held the important level down here and we did get a nice springboard up. We broke the lower highs pattern. So there's things to be happy about here for the Nasdaq 100 and we're just going to want to see if we can follow that up next week. Here's what the weekly chart looks like. Once again, we could look back here in a couple of months and say, wow, this was the perfect retest. We kind of came back down. We consolidated for 5 weeks, challenged the old highs. Buyers showed up. We went up pretty aggressively and then boom, off to the races. So that is certainly a probabilistic, higher probability path that could happen here. Let's see if, earnings will allow us to move in such a way. If we take a look at the Russell 2000, again, we are basing over my kind of line in the sand level here around 225. We saw some follow through. We're now holding in this range, kind of consolidating sideways. Constructive action, I think, happening all around here. Let's see if it can continue to hold and if we can build on it and then start to attack the old December highs here. So that's the way things look on a index level. Generally got basically, improvement across the board. If we go to some other markets, we've got gold. Take a look at the GLD on the weekly basis here, closing at a new weekly high. If we go down to a daily chart, you can see not quite a daily closing high, but certainly some good performance here. Again, the pressure of the US dollar kind of rolling over, the dollar index rolling over, certainly helping GLD here. So nice to see in terms of those gold bulls. If we take a look at Bitcoin, let's take a look at this here. You can see that we are chopping it out here. There's a good tug of war happening right now just underneath the old highs. So the old highs right around, call it 106 if we're looking at spot Bitcoin price back in mid to late December. You can see price, kind of launched off of that failed breakdown. Feels like forever ago, but just a couple of weeks ago, we rallied all the way back up towards these highs, and now we're chopping it out here. I don't love the increased range here that we're seeing right at these highs. I'd love to see things kind of, cool off a little bit, digest, go a little sleepy sideways, consolidate a little more constructively. I did tweet about that this week, but generally speaking, look, there's some volatility here. We did have some executive orders. There was the SAB 121 repeal, which will allow financial institutions to custody Bitcoin on their balance sheets and actually get credit for it, or have it count as an asset, not a liability. We also got the digital asset working group that's going to assess whether or not the U.S. government's going to, in fact, create a stockpile of digital assets. So both of those things were pretty market expected. They didn't really come out of left field. So that's why we didn't see quite a big reaction. I think, obviously the strategic reserve is certainly something the market would love to see in terms of price. That feels, certainly months away and lower probability of happening. But for now, Bitcoin seems pretty happy here. Again, don't like the increased range, but certainly, with some of the events taking place just generally from the bigger picture, just zooming out, it still feels like Bitcoin and to a lesser extent, digital assets are a place you really want to be paying attention to, because all the stars are sort of aligning in that area. So Bitcoin feels here to stay, whether or not this breakout sticks, but it is pretty much at all-time highs. We still have a position in it, and we'll see if that can continue next week. All right, let's finish off here with some Mag 7 stocks. Let's take a quick look at how things are looking here going into earnings. Apple still looks terrible. Best thing to say about it is it's oversold, but from a relative strength basis, it's just been totally in the penalty box. Maybe some big players moving out of that. Maybe Buffett selling more shares. We don't. We'll certainly see in the future. Microsoft, you can see, still pretty much just in choppy land. Nvidia, same thing. Google still looks to me one of the best, and of course Meta breaking out to new highs. And Amazon, actually, I keep sleeping on Amazon myself, but looking constructive, breaking out here. So not too shabby, as we've got basically 3 out of the 7 trading at all-time highs. So that is all for me. Thanks as always for tuning in. We do these shows every Friday, so make sure you are subscribed to the show, and don't forget to check out those links in the description of this video. You can support the show with IBD. We've got TC2000 links. We've got our own trading systems, so check out if there's anything that can help you on your trading journey. And with that, have a great weekend. We'll see you back here next weekend.